Hi guys, welcome to another session with us and Vantage. Let me know if you guys can hear and see me. Okay, today we'll be talking about the key strategy and technical setups. Just let the rest of the attendees come in. Give them a few more minutes before we start the session. Let me know where you guys are from or where you guys are tuning in, and thank you for taking your time today on a Thursday, 4th of August, to join us on Vantage Strategy Clinic. Let me see. Let me type in the chat. So it's a Thursday. Let me know what you guys are up to and where you guys are from. On Thursdays weekly, we'll host a session talking about the strategies, discussing and analyzing charts, some technical setups. Hi. So if you do have any questions, please post it in the chat because I have another page that has a chat box where I can see all the questions that you guys have. So feel free to question me anytime during the webinar. So, okay, maybe we should just start the session now. So hi everyone, I'm Annabelle. Welcome to our weekly strategy clinic as we discuss and analyze key technical setups. So this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We are an award-winning research firm and finalist in 2019, 2020, 2021, and Best FX and Equity Research. So we work with the major financial institutions to help them forecast where the markets are heading. And now we have a special partnership with Vantage Markets where we are bringing you the good stuff every day. So welcome everyone to Strategy Clinic. So as usual, I will start off with the disclaimer. The information, context, or opinions which are expressed in the presentation and on the following slides are solely for the presenter and not necessarily those of Vantage, and are solely used for educational purposes as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. So this webinar is purely educational and nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before trading. So introducing the team. So we have Desmond Leong here. He's our CEO as well as Chief Trader of the Everest Fortune Group. We have Cassandra Ng, a prop trader, Jin Dao, prop trader, and then we have some investment analysts, Melanie Chong and Joanne. So my picture is not up yet because I'm relatively new to the team. So maybe in the next couple of presentations, my picture should be up there. So apart from me, sometimes you'll see Desmond, Cassandra, or Jin holding the webinars. So like I mentioned, we are the finalists for Best FX Research in 2019, 2020, 2021, as well as finalists for Best Equity Research in 2020 and 2021. Okay, so let us begin today's session where we'll be analyzing some of the charts. Let me see. Hang on. Okay. Right. If you do have any requests, please send in on the chat as I'll be, if we do have the time, I can actually analyze some of the chart that you guys request. Okay, let's start. Hi, Deborah. Hi, Deborah. Oh, hi, Deborah. Can you see? Here, let us begin the session. Okay, maybe I'll do, let's start with perhaps the gold because I was actually taking a trade here. So let us see. Okay. Okay, so I use a clean chart so that we can analyze it and discuss together. So if you have any questions, please feel free to ask on the chat. Okay, let's see. Daily chart. Okay, what I'll do is usually I will zoom in from the daily to 4 hour and then 1 hour. So on the daily chart, we can see that I'll usually briefly just highlight some key levels. As you can see here, this is a very major key support level. Prices have been going in a descending trend. Let's see whether there is any trend line or channels that we can draw. Okay, this is quite nice. It's a very strong descending trend. As you can see, it connects to more than three points. Okay. I think we have just missed a reversal here. Let's try with the Fibonacci extension. It looks very nice. Yeah, almost there. Okay, so we can see here that actually we have kind of just missed a key reversal, which is quite nice. At the 127.2% Fibonacci extension mark. Okay, but that's done. Let's not look at that. Okay, we know that now we are aware to take note of the key support level here, as well as a downward trend, a very strong downward trend. Then I'll zoom into the 4-hour chart. Okay, this might be a key level here because as you can see, if channel don't break, it will actually go back, it will bounce back to hit the support level. So now we are just pending for this trade to be, for this support, this trend line here. This point here will actually break the channel before it will go up with a bullish momentum. Hi Zoran, hi. Can you actually see the chart? Oh, okay, let me try, hang on, yeah. Okay, can you guys see the chart now? I'm so sorry. How about now? Yeah, can you see my charts here? Okay, give me a sec. I think there's a technical issue. Hang on, yeah. Sorry about that. Give me 1 second. Okay, how about now? Can you guys see my chart? Okay. Oh my God, so sorry guys. So I've been so sorry. Okay. So I've been analyzing the XAU. Maybe I'll give it a I'll restart it. Okay, do send in any requests if you have. We'll analyze and discuss right on the spot. So this is a fresh chart, like I've mentioned. Usually I will zoom in from the higher time frame, which is the daily, to the 4-hour, then to the 1 hour. Because I use daily first because you do want to know what are what is the general market sentiments? Where is the market generally heading now? Then you zoom in to see to confirm whether it's a downward descending trend or it's a upward bullish trend, bullish or bearish. And then usually I'll take the 1 hour chart to trade because you do want to monitor your charts very tightly. You could actually use a 5 to 15 minute chart, but it's depending on how much time you want to spend on your trades. Okay, let's dive in. So daily, generally I will zoom in on daily first to see whether there are any trend lines or key levels that we should take note. So here we can see that this line here is a swing low for many months. As you can see here, 1, 2, 3, 4, 5 swing low levels that touches it and bounce off. Okay, Deborah, I will get to that later on. So let us do this first. Let's complete this. So you can see here, this is actually a very key support level that you should take note. And then here we can see that it's descending very nicely. We can see whether we can draw any trend lines or maybe a channel, a descending channel here. Okay, fits perfectly. Okay, fits perfectly. Okay, the points you can give and take because they don't always accurately align with each other. But this is a very nice descending trend line, as we can see here. So you know that market is actually going in a downward direction. We can pull out some retracement levels. Let's see. Okay, this is the Fibonacci retracement tool that we can use. It's currently testing the 23.6 mark. Yeah, right here. So it's retracing. So this is a level that I will take note of because it seems like it's testing the channel here. So if prices fail to break here, which is about the 23.6 retracement level, if it fails to break, I'm taking a shot where it will go down and still respect the channel in a downward descending momentum, bearish momentum. So this is the level where I'm taking note of right now. Okay, so this is a daily chart. We can zoom in further to fine tune and define our trade levels, like at which price you want to put your take profit, stop loss, or where you want to enter your short or long positions. So lower time frames are better to make more accurate positions, trade positions. Okay, so right here, we know that this is the 23.6% Fibonacci retracement. We can do another one, perhaps here. See whether it's in sync. Okay, here, let's see whether there are any more supporting trends or tools that we can use to make sure to reconfirm our trade. Okay, guys, about that. So it's also about a 61.8% retracement for this level, at this level. So now we're just waiting for price to either break out of this channel, to go in a more bullish momentum, or it could potentially rebound and go this way, backwards. It's all depending here. So you can throw in your other indicators like your moving average or your stochastic or even your Ichimoku cloud. Okay. On a daily time frame, it seems like the prices are still respecting the Ichimoku. It's still below the red cloud, which signals a bearish trend. So for this gold USD position, I would be waiting for a short position if this bounces back, pulls back. So my entry would be placed here, right above my entry would be placed slightly above the channel, and then wait for it to bounce off and come down. Yeah, so that's my analysis. Do let me know if you have any questions in the chat. Yeah. Hi, Joanne. Fibonacci levels and trend lines channels. Sure, I can give you a quick recap on the different Fibonacci levels later on. Maybe let's dive into one of Deborah's requests first. Okay, let's see UFC JPY. Okay. So like I said, I will be zooming in from the daily time frame and then zoom into the other smaller hourly charts. Okay, so right here we can see that it's in a very strong ascending trend, very strong bullish momentum, and as well as it's above the Ichimoku still. But right here, you have to take note, it's slightly breaking it. So bullish trend, yes. Secondly, let's see whether there are any, let's see whether we can draw any retracement levels. Probably 23. Yeah. It's retracing at the 38.2% Fibonacci retracement. Okay, you can see here. So this is also one key level that I will note right here about the 38.2%. The overlapping support or resistance. See, this is the swing low. And this is where price rejected a couple of times, come back to test. So this is the overlapping support. Okay. And then I will zoom into the 4-hour chart. Okay. Okay, let's do a next Fibonacci retracement here. Okay, it's testing at the, yeah, so it's still, it has actually slightly broken the 38, yeah, it has broken the 38.2%. So I think, okay, for USD JPY, let's try to use, okay, let's try to, let's try to use the fib level again. Okay. Okay, it is now. So as you can see, for trend, to draw a nice Fibonacci retracement, we have to make sure that the trend line is as close to the prices as possible without much deviation. I think maybe this one is too much. As you can see that there are many gaps right here. So you want to be as close as possible even here. Okay. So there's no right or wrong way to draw your at which point you draw your retracement levels, but usually it's the highest and lowest, and it should be as close as possible. So right here, when I draw the Fibonacci retracement, we can see that it's on its way to test the 50%, right here, which is also one of important level to take a note, which is here. So this will be the first resistance that this price is gonna test. So once it's broken, it might go to test the 61.8%, which is here. But for this trade, for the USD JPY trade, I would not take any positions for now because of fundamental economic news that are makes this trade a bit messy. So actually not taking any positions or staying neutral is also as important. So my analysis for this is that price will actually come back to the 50% retracement to test before a pullback, before any pullbacks. Zoran, sorry, which trade are you talking about to put my stop loss and take profit? Okay, let me just see. So for gold, like I mentioned, let me just conclude this. Okay, for gold, I would, like I've mentioned, all the important key levels and the retracement level. For now, I might stay out until it actually breaks this channel or it reverses. So I'll just see the next move before any trade is taken. So for gold, Zoran, where would I put my stop loss and TP? Okay. Okay, I would actually wait and see whether this price here, I zoom in, hang on. This is a very important key here, right here. I think this is a very important price level. Okay, this will be messy. Right here, maybe here. I think prices have to break this area before I will take any trade. But if it does, I will put my stop loss. Okay, if you are shorting it, which personally I'm taking this trade. If I were shorting it, I would put my stop loss at, give me 1 sec, at the next, yeah, I'll put probably somewhere here. You have to see where are the key, whether there are any key support levels, or some people might use their risk appetite to ratio it. So I can see that maybe right here. Okay, this might be an important key. Somewhere here. Let me change the color. Stop loss. Okay. Depending on your risk appetite, because some people they might ratio it 1 to 1, 1 to 2, or 1 to 3. It's up to your own risk appetite and your own due diligence. But if I were to take my trade should be somewhere around here. Depending on whether this candle reacts in the next couple of hours, this green candle here. If it doesn't break, I would wait for the next candle to actually show me a sign of bearishness before I place a trade. Maybe somewhere below here. And then that my stop loss will be above, slightly above the chart at the key level, which is here. And my take profit would be somewhere here, depending on your risk appetite, like I mentioned. But 1 to 2 or 1 to 3 is a good gauge. Meaning stop loss 1, your profit 2 or 3. So that is where I will put my profit somewhere here, 2 to 3 times my stop loss. I hope that answers you, Zoran. Sorry. Okay, so now let us move to maybe another chart. Continue to throw in any requests you have. I will try to analyze them and analyze as many as I can. Let's go to, okay, let's try USD CAD. Okay, same thing. Okay, maybe right here I will just clear Joanne's queries. So for Fibonacci levels, usually these are the whole levels, 0 to 100. Let me draw the other way. It's confusing. Okay, levels 0 to 100 are the retracements. So these are the retracement level, meaning to say how far has price gone behind, how much has the price reversed, and where is the next reversal point. So it tells us how much the prices have reversed and help us project where it could reverse to next. So that is the 0 to 100 level. And then we have the extension, which is above the 100%. So the key levels to take note are 127 and actually 127, 138.127.2, 138.2, and 161.8. Usually the key level to note is the 127.2 extension. So these are leading indicators, meaning to say they will lead you to the next point or help you to project into further into the charts. Help you to project or help you to know where the next reversal might be. Yeah. Okay, I hope this clarifies, Sean. Okay, now let us go to USD CAD. So USD CAD on a daily chart is a very nice, subtle, but very strong bullish momentum. Let's see whether we can draw any parallel channels. Remember, you can't always put your channel so accurately where it goes through all the points, but this is just a general gauge and as a tool for you to know where the general market is going. So we can see here, it's trending upwards in a very bullish and steady momentum. So this on the daily chart. Do take note and highlight any key levels. Yeah, this one is quite choppy. So key levels, I don't think there are any right here. Okay, let's zoom into the 4-hour. So 4-hour, you can see that this is still bullish, okay, but 4-hour chart, you can see that the red cloud, the red Ichimoku cloud signals a bearish momentum right here. So the thicker the cloud, the stronger it is. As you can see here, it's still in a very bearish, but right here you have to take note because it seems like it might break the Ichimoku cloud and go into a bullish momentum. So on the 4-hour chart, any key levels, take note. Okay, we can see here that it's going in a slightly bearish movement. Okay, wait, let me just change something. Okay, this is misleading. I have to change it to green. Okay, this is better. Okay, although this is on the 1-day chart, right? This is a slightly bullish momentum, but in the general sense, USD CAD has been in a downward strong bearish momentum since the first quarter of 2020. So you have to take note at the back of your head. This might be a retracement. Let's see how many percent. Okay, it's about okay, it's about 38.2 to 50. Okay, so it's kind of testing this level. Okay, this is quite a key level as well. These are just gauge. You won't take a trade on a daily time frame. Okay. So this is at the 38.2 and 50% in between retracement level. So it has tested the 38.2 and then reversed back. So it kind of shows that it still might be in a bearish momentum. So let's zoom in further to the 4-hour. So prices have been coming off here in a downward trend, although it's quite choppy, but you can see that it has rejected the 38.2%. and it has been coming off and broken the previous swing lows here. These are the previous swing lows. Yeah. So for USD CAD, I will stay out until the prices have come off here and maybe bounce back to show me strong signs of a bearish or bullish momentum, because right now it kind of looks like it's ranging without any very strong key levels or points or retracement levels. Okay, sorry. Technical issue, sorry. Okay. So yes, like I mentioned, it looks very choppy to me, although it's in a downward trend, but slightly choppy. So I would stay out of this trade as well until there are major news, or if there are any key levels that pops up in the next few days. Because like I've said, it has been bearish for a long time, and this looks like a very clean bullish momentum. So if you were to take, if it's me, I would actually take a short position because it's still respecting the channel itself. Yep. Okay, so let me know if you have any other questions in the chat. If not, we can move on to another Forex pair. Let me know if you have any Forex pair that you would love to see me analyze. If not, we can do, let's see. Let us do maybe USD. Let me know what are some of your favorite indicators or favorite tool to use when you are analyzing your charts. Which tools do you guys use most of the time? Yeah, I can see some Fibonacci, some moving averages, some stochastics. Okay, those are good. So personally, in my opinion, I feel that yeah, RSI, yes, EMA, FIPS, price action, yes, these are very important indicators and tools that you should combine and use it together, because for retracement or any one of the RSI or MA to do it or to use it on its own is not very effective. So what we are trying to do on the charts is to combine all the gears together to make sure that our position entered or the entry level is good and firm. Okay, so let us take a look at NZD/USD. So daily chart, downward momentum, see whether there's any lines, trend lines or channels that you can draw. Nope, nope, not a nice channel to draw, so you don't have to do it. So let's see where is the how far it has retraced, whether there is any retracement levels to take note. Here you can see this is quite far. Yeah, it has broken the 61.8. Okay, this might not be the best. Okay, now take note. This might not be the best retracement to draw. So probably I'll draw it closer, or if you can't, you don't have to force it. You can just zoom into another time frame and draw the FIB levels. Okay, but at the back of the head, you should know that the channel is actually in a descending trend, bearish momentum. So go to the 4-hour. Okay, I would draw my let's draw some FIB levels. This might. Okay, actually, I would draw This looks quite like a nice, give me a sec. I'm trying to find whether there is a extension to draw here. Okay. Okay, so for extension, it's actually a leading tool. So I'm trying to see whether there is a potential that since it's a bullish momentum here, prices might actually go up. So if it goes up, it might come to this level at the 127.2 before a reversal, because it kind of looks like a good projection here on the V. So for Fibonacci extensions, we are actually looking for the V setup, where prices will break the 100% retracement and go beyond the 100% Fibonacci retracement to the 127.2 before a reversal. So potentially, if you're looking at NZD USD, do take note. Prices seem to be in a bullish trend. Okay, so I will be looking for a long position. Before I take my long position, if prices are still going up, you can actually take a long position up to here or slightly below the 127 before a reversal, as well as a key swing high. Alternatively, if you want to be safe and you want to trade along with where the market is headed, because in the bigger picture, actually the market is still going down. So usually I would trade with where the market is headed instead of going against. For such short-term positions, you have to be very careful and you have to always monitor it. It's not that you can't, there are always opportunities there. So if you were to take a long, that would be the levels that I will look at. Prices might actually go upwards to somewhere near the 127.2% extension, as well as the key swing high here. So you can see here. Okay, see whether there are other levels. Yeah. Or you could actually trade with the flow of the market direction, where I will wait for a setup, meaning to say I'll wait for price to go up, break the 100%, and closer to the 127 or this level before I short it. Yeah, so for NZD USD, I will be waiting for a short setup instead of taking this risky short-term long position. So let me reiterate. I will wait for the price to actually go up, go upwards slightly, break this 100% retracement level all the way up to here at the swing high and somewhere close to 127.2 to see whether there's any reaction here. So if price were to give me a confirmation that it is coming off slightly, I will put a pending order right there, because 127 is actually a key level that you should take note for extension. This is that 127. It's a key level to note for Fibonacci extension where price might reverse. Yep. So stop loss would be slightly above, perhaps, depending on where your order is. Okay. Usually I'll go, depending on where your order is, as well as what is your risk appetite. So my stop loss, you can also look for other indicators as well. Maybe you want to be below, yep, somewhere here for my stop loss. And then if my position is here, I would usually take profit at also the 100% or slightly above it. Take profit here. or slightly above, depending on risk appetite. It could be your stop loss to your take profit in a ratio of 1:1 or 1:2. Obviously, having the take profit to be more because you won't want to have a stop loss that is bigger than your take profit. It doesn't make sense financially. So this is all about risk management. Okay, so this is what I would do for the NZD USD. If you do want to trade on a shorter time frame, you can even zoom in more to see. Okay, even a 15-minute. But for 15 minutes and a 5-minute time chart means you have to constantly be there to watch the markets. Personally, I don't do that. I will go to the 1 hour or 4 hour chart to trade. But these are all personal preferences. It's entirely up to you. Okay. Okay. We can move on to another currency pair. Okay. Okay, let's see. I have a request for, let's see, US dollar, Swiss franc. Swiss franc. Okay, let's see. Oh, looks like really nice. Double top. Okay, very strong double top here. Take note, daily chart, you can see that the prices are in a descending trend. See whether you can draw any parallel channels. Okay, not very nice. Not. Okay, descending channel, we all noted that. Find any key levels to note. Okay, nope. Go to the 4 hour chart. Strong bearish momentum. Oh, okay, this looks like a nice. Let's see whether there is a good extension setup. Oh no, okay, this is a bit too far. Okay. Okay, so at the 4 hour chart, prices are quite bearish still. It has already broken the Ichimoku. So this is one level or the key prices to take note. Okay. Let's see whether, let's see the retracement levels, 28.2. Okay. It is now currently testing and it has kind of reversed from the 38.2% Fibonacci retracement. Okay, so the next support level, I'm guessing would be support level. Try to find trend lines if you can, but don't force a trend line if you can't find, because you don't want to make any inaccurate you don't want to draw any inaccurate trend lines. It will affect where your trade entry or take profit will be. So if there are no trend lines, you do not have to draw it. So if this price were to reverse, my first support would be the previous swing low or slightly above. Okay, here, this would be my first support. If price were to reverse in this manner, okay, if price retraces back, so let's see whether that is in any of our, okay, it doesn't really align. But you can take note of, sorry, excuse me. You can take note of this level where price might reverse to. So this is on a 4 hour chart. If you want it to be a bit more detailed on where you want to take your positions, your stop loss or your profit, you can actually zoom into a smaller time frame. So it helps you fine tune. Sorry. So smaller time frame actually helps you to fine tune and make adjustments to your entry levels, take profit, stop loss. It gives you a more accurate position instead of higher time frame. So on a 4-hour chart, this might look like a small move, but actually when you zoom into the 1 hour, it's quite a decent trade size here, if you could trade this. So on a 4-hour chart, I would be looking for price to reverse back to the 23 point. Okay, I would expect the price to be reversing back to the first support, which is the swing low right here. Okay, ignore this. I think it's too wide again. Yeah, I would expect it to come back to the first support here. So if it breaks, it will go back further. It will pull back further to test at the swing low, which is my second support here. So based on this chart, based on this chart, if prices were to break this level, it will come down to the second support and the swing low. If prices were to bounce off here or even here to go up into a slightly bullish momentum, I'll be looking for it to test at the swing high here. Where it cuts a few candles. Here would be my first resistance. And then subsequently, it might test my, let's see whether there's any levels that I can coincide with. Okay, actually for the first resistance, right? This is the place to take notes. So this is the place to take note. There might be some reversals here. So if you are playing if you're taking any long entries or long positions here, do take note of this level, this highlighted level, because there might be some resistance here because it's the 50% retracement level as well as swing low and overlap. It's the overlapping support and resistance. So if prices were to go up further, if it breaks the first resistance, it will go to test at the 61.8%, which is also a previous swing high. So this will be my resistance number 2. But depending on how you would like to trade, it looks like it's in a bearish channel, quite strong bearish momentum, and it has broken the previous low. So I'm expecting prices would actually short and come down to test again at this low level. So personally, I like to trade with the market sentiment instead of going against it. Okay. Okay, any questions, guys? I'm open for any any requests or any questions. Do let me know. I hope that this session is useful as we discuss and analyze my insights. So if you do want to see any recorded live session, you can log on to YouTube or Vantage page. So that's it for my session today, guys. I hope it's insightful and useful. Do let me know if you have any comments or any questions. If there is no more, I would log off and I will see you next week. Thank you, guys.